The following is a presentation of TFNN. The Option Hour, brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Daryl Martin.
Welcome, folks. Daryl Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. We get the Dow Industrials up 29, Nasdaq up 9, S&Ps are up $1.50. You got gold down 13.50, silver's off 26 cents, platinum's down 9. Bonds, we have the 10-year down 17 ticks, 30 off 10, and King Dollar up 617 ticks, 89.57. The euro's at 85, and the yen is up 1.74 at 121.53. You have to love it.
Yeah.
No doubt. We got our man, Mr. Daryl Martin, with us. And, folks, if you haven't test drove the Nadex platform yet, come over to our website at TFNN. You can see the banner on the top, on the side. Hit the banner. You can bring up the exchange. It's free. Test drive. They'll put $25,000 of paper money into it. And, of course, each and every day, don't forget, Barry Dow has a great show, 1 to 2 Eastern Standard Time. He specializes in this Nadex platform. It's a defined risk platform. That's the bottom line, folks. And when we have volatility, which we have had in this marketplace in an extraordinary way, whether we're talking currencies, commodities, in a big way. And, of course, this morning, what we did have is that the jobs numbers come out. As the jobs numbers come out, dollar went to the moon, euro went in the tank, yen went in the tank, but higher price, and the S&Ps moved 7 points. So there's some big action out here. What's going on, brother?
Hey, buddy, NFP day.
Yeah, no doubt. No doubt.
And get those big moves, and I go through it. I warn everybody, right? I'm like, hey, you're coming up, which is a warning more to get ready to hopefully take advantage of it.
Yes.
And you just top in and just check out the different ways you can take advantage of it. You can go both directions. You can go neutral, just looking at premium, and it's another. We get this every month. It's one of those things we can count on, which is awesome. Which is
amazing. There's no doubt. And like when we take a look at, I guess the move at 8:30 this morning was definitely, and this would be in any trading markets, folks. Okay, but what does happen in the Nadex platform is that you have defined risk, number one, but the contracts are timed out. And if you were in the currencies and gold and silver at that particular point, it was a sweet move. And when I say a sweet move, it was a large move. And whether you sold that move, bought that move, it's the counter-trend move that you could have got. In gold, you definitely could have got some action on it. Because what you had with gold is that this is at 8:30, the deal come out. And what you have, GCG5. So if we take a look at this contract, what you're going to see, gold had a monster move this past Monday, goes topside with incredible volume. When the numbers came out, gold went from a price point of $12.08 down to $11.86, and then rejected that lower price, and there was a 10 o'clock, there was an 8 to 10 o'clock contract out there. And bottom line, it shoots all the way right back up to $11.98. So they brought the premiums in that, but the bottom line is that you still had a nice little trade going on there.
Yeah, as long as there's, and the premium, you expect it to be in there, and if it's too high, you just
move on. Yeah.
Yeah. Well, actually, a lot of times I'll do reverse because I expect it to pop and pull.
Okay.
And so if I go in there, let's say to go into a straddle or something, it's $80.
Yeah.
If I expect up to a 100 pip move on euro dollar, I don't expect it to go at 100 and stay at 100, maybe pull back. And so that gives me an 80 pip break even, up or down on euro dollar.
Okay.
And if every ticket's within 80 ticks or less of a movement, I collect a dollar.
Right.
And so when it's really expensive and I'm like, there's no straddle to be had, whatever that combined amount I could get if I did the opposite.
Yes.
Of a straddle, so instead of buying, I sold on the one side, instead of selling, I bought on the other side. That's basically my break even from with the euro dollar went up or down. And that allows me just to stay within that range and go, hey, you know what? I do expect a big move, but this is a ridiculous amount of premium. And an option, options are often overpriced.
Right.
That's why
you
look at VIX futures options. It's like the overpriced of the overpriced. And there's volatility reversion and everything else in there.
Sure.
And so same thing here. You go in and you look at these options, and you're like, you know, that's when I first discovered, because I used to be real big on the straddles all the time.
Okay.
And in a P day, FOMC day, stuff like that, and I was like, $80 for like a straddle on pound dollar. I'm like, I only think the thing's going to move $80.
Yes.
And I'm like, well, okay, give up some bid-ask spread, $70. You know, to do the opposite. And I'm like,
right.
If it moves $80, I'm down $10.
Right.
And I expect it probably to pull on back or whatever. I mean, there are days where it keeps going. You get out.
No,
like
but it makes sense. It totally makes sense.
Yeah.
You know, it totally makes sense, because if one side of the trade doesn't work out, folks, meaning when I say work out, you look at it and say, no, this doesn't work. Most times, not most times, but you do want to look at the other side and say, hold it, that's the side of the trade you want, man. It's pretty wild. What's going to get wild out here right now is the oil market, folks, okay? CLF5. So check this out. If we go over to oil and look at oil for a second, CLF5, 1 second, CLF5. What we have with oil on a 10-minute basis, it just turned around and took out its swing point from 2 days ago. Hold on one second. CL. Keep putting 6 up. We're not in 2016 yet. Okay, so seriously, what we just did, let me put this on 2 days so you can see what's happening here. And it's going to be interesting, too, because oil should bounce, but guess what? You know, doesn't want to bounce today. So we just took out the swing lows from 0900 yesterday, which was the price point of 6609, and we just took those out with 10,000 contracts, and it was 9700. So that's, you know, you stay below right now. If we stay below 6609, and, you know, we're basically 6588, that can do some damage to oil again today, you know. So it's going to be interesting watching that baby play out. Inside the gold market, all that is a test of that huge spike higher. King Dollar is going to be really interesting here. So when we take a look at King Dollar, what King Dollar has done is this, folks. It's gone to the June 2010 high, tested that high, and then gave it up yesterday. This morning, as soon as the job numbers came out, spikes up 600 points. It's over that high right now. Let me just see what it's hit thus far. So we've hit 89.49. Oh, I love it, man. That's a trip. So check this out, man. It'd be really nice if it could get a little bit higher, because, see, okay, so there's what it was trying to do for a month was test the highs of June of 2010. It took a month to do that. Now, there's 3 other swing highs up there. One of them is from November of 2008, which is 89.25, which tested this morning. And the highest one is 89.71. You know, so we'll see where this shakes out. The 71 will probably get hit, you know. What is still happening, however, is that you don't have those metal markets getting killed. So that's still basically saying that, hey, you know what, this dollar move is almost done. If we go over to that bond market, we take a look at bonds. Bonds still refuse to give it up when, in fact, you know, TYZ. Oh, bonds still refuse to give it up with the market at highs. TYH, okay, TYH5. You got to love it. 2015, we're on 2015 in a trading aspect. Oh, so check this out. This is pretty cool. The 10-year, folks, came down to 125.23 when the number came out. We are doing that. You get 1.1 million contracts, and 1.1 million is going to get to 1.9. Bottom line is that they can't break that bond market lower, which is just a total mind blower, man. It really is. So currency pairs. Talk to me about currency pairs on the Nadex platform.
All right, so you can go in, and there's several things in the currency pairs. But for people who are just interested in trading Forex, without getting all complicated about binaries, you can go in and trade the spreads. And it's basically the same as trading a currency pair.
Okay.
Except for, you know, you're basically saying you have an expiration on how long you're trading it.
Yes.
So like 12 o'clock or 3 o'clock.
Right.
And instead of having to go in and put up, you know, basically uncapped risk, you put up capped risk, and people go, how do you calculate the profit and all that? Same thing as anything else like a stock. You buy at one price, you sell at a different price. The difference is your profit or loss.
Right. The
only difference here is if the max risk is $30, that's the most you could lose no matter what.
Which is so cool. And that's unheard of in the currency market. Big time.
And I mean, I'm looking at Aussie dollar right now, $30,
Yes.
And that's still 3 o'clock.
Right.
And so you don't, like, in that case, I wouldn't, like, say need to use a stop loss. Unless I wouldn't only have, like, a 10-tick stop or something. I wouldn't need to use a stop loss.
Right.
Now, just because the max risk is $30 on, and what I'm talking about right now is the Nadex spreads.
Okay.
But, just because I do have a $30, stop loss doesn't mean that I have to, or max risk, doesn't mean I have to wait. I mean, if it goes down 5 ticks against me and I want to hop out, I can hop out.
Right. And the thing that's amazing, folks, is that when you're doing these currency pairs, if you've ever just traded currencies on a straight broker currency deal, it's a wipeout city up and down. I mean, you can just get killed because of, just like this morning, news events, okay? That's what it comes down to. What's cool about the Nadex product is that you still have defined risk and you have the time that the market can go both ways. Now, it hasn't this morning in the currencies, okay? The euro went south, dollar went topside, and the yen went south. But there's many times that it does. And what ends up happening there is that you want basically fast fingers, because when that happens both ways, well, guess what? You can basically get out clean, get out with a small loss, or in fact, get out with a large profit, depending on what side of the trade you're on. So yeah, exactly. So I'll go in there, I have a short, or a long view, I'll hop in, I'll take the trade. I'll look at where my stop is, I'll decide if I can find a spread I like with a really tight stop, that's what I'm going to use, because then, like you said, your trade is your stop loss. Right. If I don't find one that I like the max risk, then I'll just get out of the trade if it moves against me by X ticks, Okay. So, I mean, you trade them both ways, and, of course, it's always beautiful when you don't have any stop loss. But, because then you put it on, you put on your take profit, and you just let the thing do its thing, and you don't have to have any of that heartbeat. And then, my favorite thing, I've talked about this, is my first strategy I came up with on Nadex several years ago. Okay. Still my first thing, is going in and, let's say I had a long view on Aussie dollar. Yes. Or, say that the euro is going to bounce up from where it's at right now. Okay. Yeah. Then I'll go in here, and it's really, it feels complex at first, but it makes a lot of sense. It's just like, if I wanted to buy Apple today. Yes. But I wanted to, lower my risk, I'd buy a put, right? Right. So to hedge my trade. That's right. So the issue is, anybody who's traded options for any length of time knows that now Friday, obviously it's an easy day because, you're on like expiration Friday, stuff like that. So in a lot of the options now, like, Apple weekly and stuff. But what do you do on Monday when you want to buy, say, Apple? Right. Right? You buy a put. Well, if you buy an at-the-money put, there's a lot of premium in that, right, at least for a week. Yes. You're giving that up. This, you have, like, an hour or a day. It's always expiration Friday or better on Nadex for buying a option to hedge your future or forex position. No doubt. You stay right there, folks. Dow and I come right back. Dow Industrials right now up 54. Nasdaq up 17. S&Ps are up 4.5. Gold down 13. Silver up 28. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Al Mott and Tom O'Brien. Appreciate you growling and prowling with us out here. And, folks, if we go over to the S&P right now, what the Nadex platform has done almost a month ago now, they have these 20-minute S&Ps, well, all the indices, actually. But if we take a look at these 20 minutes right now, what you're going to see is this. And these are the binaries that are inside here. So if we look at this E-mini right now, this is what what you're dealing with. We had the spike higher yesterday. You see that spike, Darryl, at 12:30 yesterday? It was a trip from 70 to 77. So you had the spike 70 to 77. What that was all about was
spiked right up and came back down.
That's right.
We were actually talking about that on the show because I was like, this is my target. And I was like, I think I'm going to hop up there and go short.
Yeah, and more than likely, that was an institution selling into the marketplace, getting everyone's stops, and their stops were the institutions sell. The reason I'm saying that, folks, is that, see, either way, an institution can win at that point. Because if they're going in, well, let's put it this way. It's not that they win. They'll find out what is up there. Because when you go in and hit that like that, if, in fact, there's more buy stops in there, well, guess what? The S&P would have run up 20 points in about a heartbeat. Bottom line, it couldn't hold it. That means it was cleared out. And what the market has done thus far today is that your first expansion up, we got to 77, same number. We missed it by, I think, 2,500s. Yeah, 2,500s. So it got to 77. Next leg up, which was 10 minutes ago, we got to 76. Now you're dealing with, I guess we got 13 minutes. It's a close call at this point. I'd probably wait for the next 20 minutes to come in. But what does happen is this can't make it higher. That's the bottom line. So the question would be...
Okay, I see where you're going now.
Yeah, the question would be is that, okay, now you don't need many points on the 20-minute ones, folks. In fact,
They're only a point wide. They actually even get narrower, like right around lunch.
I know. Well, you know what I've noticed is that on the 20 minutes, if you're trading the 20-minute ones, folks, right, the ultimate is that a swing point is getting challenged at 10 minutes into the 20 minutes. So there's going to be, like, because what happens is this, is that the time erosion of the premium, even though, you know, we're talking a half a point inside the S&P, goes away, right? It doesn't go away, but it gets a lot smaller, right?
Right.
And
because it's so much narrower.
Exactly. Yeah. It's getting narrower. Now, you have less time also, okay? So you're playing with less time. But I've found that 10 to 11 minutes into these 20 minutes, if in fact you're challenging the swing point at that point, is really sweet because you need hardly any movement at that particular point, you know, in order to come in the money. And if you do trade these, what you definitely want to do is once you either buy or sell them, you want to put your order to close them on the other side. You know, the reality of getting the full VIG, the probability is not small, but it's probably only 20-25%. The probability of getting a profitable trade out of it goes up dramatically at that point. Just because what you do normally get is you get a few spikes. But if you don't have your order in there to close, whether you're a bull or a bear, you're not going to get it. You know, because they spike that dramatically. And you'll see, if you've traded these, when I say dramatically, they can go from like an 87. So an 87 would be saying you're buying it at 13 bucks if you're selling it, okay? And it can go from an 87 to a 50 to a 45 in literally a tenth of a second. But guess what? 3/10 of a second later, it's back to 87, okay? So that means that you went from $14 that you bought it, you went up to making 50, you went back to 14. Now, if you had the order in to sell, guess what? You get it, which is just dynamite, okay? You know, because the spikes are pretty amazing, there's no doubt. And so,
so how do I put the, like, okay, so just to, you know, walk this down. So you get up, you get the spike to that same price we were talking about yesterday, right?
Yes.
And so what you're going to do is you're going to look for, like, those 20 minutes right up there to short, like, right above the spike? Is that sort of the idea?
What I want specifically is this. Yeah, we'll bring it up.
Okay. Yeah.
I want the spike. We know the spike had 9,500 contracts, right? So 95,000 contracts, rather. Now, I don't see it taking that out. So now the next spike was at the open today, which was 77 with 15,000 contracts. We got up there with, with 56,000 contracts. 10 minutes ago, we get up there with 43,000. So you can see that the strength is dying up there, okay?
Right.
So now what I want
where we were at yesterday, okay.
Yeah, what I want to happen, the next 20-minute one is going to be in 11 minutes, okay? So with two different things are going to happen. If it tested it right now, that'll be cool because you're in an 11-minute time frame, but I can tell by the volume that it's too much volume, so you wait for the next 20-minute. You're looking for a test. You stay right there. We'll come right back and we'll finish this trade up, folks. It's Tom O'Brien, Darryl Martin. We appreciate you growling and prowling with us. Coming right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Darryl Mott and Tom O'Brien. Appreciate you growling and prowling with us out here. Let's go. I'm going to switch gears just for a second. We'll come right back to the S&P, but I want to show you something here, folks. So we started out and we were talking about the oil market, the first leg down in this intraday chart. And what you're going to see now, we're down $1.30. And, bottom line is that you can see when we had broken that swing of yesterday, it had the juice behind the move. We had broken that with 10,000 contracts, and that was 9,700. You're down at the 65.60 right now, and let's just pull this up a little. So the probability goes higher, which is really going to be a trip. That's going to try to make its way down to the 63.72. Now that being said, which is pretty neat. So when you take the oil capacity together, if you go over to the XLE. And what I'm doing, folks, is just building a little case here. So you take the XLE is down 73. We're at 80.52. You have the 80.77 is the high of the low. That's building cause to get into that. Now let's go back to the E-mini. So inside that context, okay, what was fast, down, and dirty there was the aspect that oil is going lower. Inside the S&P, oil, not that oil's huge anymore, oil's a third, okay? But your probability is that because oil's going lower, because the gas and service stocks inside that are there, that'll drag the S&P down. So now we go back to this contract, and on this contract, Okay, so we wouldn't be trading this contract. It only has 4 minutes left. When the next contract gets up, what you'd like to see is that you'd like to see the 2077 get tested once again. That's how this thing is shaking out, because we can see that we're up at the highs right here, and there's no juice behind the move. They're having a hard time basically keeping it up at these highs. And
awesome. Well,
yeah.
And speaking of only having like 4 minutes left, starting next week in demo, I think we're going to be seeing some 5 minutes.
Yeah, that's what I was going to ask you. Right? No, you brought that up
right.
on the program Wednesday.
Yeah, and they're releasing the 5 minutes on the FX from 6:05 to p.m. So at 6 o'clock p.m. they'll start trading. They'll go to 4 o'clock on euro dollar, pound dollar, dollar yen, and Aussie dollar. So, and they're going to be 5 pips wide. 3 strikes, 5 pips wide every 5 minutes.
That's action. There's no doubt about that, man.
If you don't have a lot of time, you don't have any excuse after that. So.
Yeah, there's no doubt about that. Yeah, let's go. There was a question in the den from our man, Mr. Bill, the XLF. Now, the XLF, what it does to the S&P, yeah, that's a larger sector at this particular point. You have it, it's up 27 cents. It's on, so your first leg up, if we take a look at the XLF, anything over 24.85, there's no juice there. So let's go take a look at the largest weighting, which is BRK inside the XLF, because the XLF changes dramatically. And, Berkshire is up 56 cents. We take a look at JP Morgan, and JP Morgan is, JP Morgan's up good. It's up $1.50. Okay, so JP Morgan's taking its swing point out. Looks like it's going to have volume, too. Let's pull this back. Put this on a weekly. So on a weekly, no, this is where it's going to get wild, folks. So the daily is taking it out with volume. The weekly is not even close. The weekly is going to be half the volume. And that's pretty amazing. Okay, so now it's going to be based on price. We're at 62.87. The volume is, thus far, is 56 million. So it'll end up doing 56. It'll end up probably do 65 million. You're going into 111 million. So then it's going to be, does it hold price? If it holds price, yes, it can go higher. It doesn't hold price. That's a classic failure on volume and price. And, if you do have the Art of Time in the Trade software, you know that that'll pick that up, number one, on that software. But what you also have there is this. When you're going over a high, and it doesn't hold price, with less than 50% of the volume, your probability goes much higher that that's the end of the move. So it's going to be intriguing watching this play out. What's going to be really a trip today, Darryl, is watching this dollar. We're up 652 ticks. And yeah. That is a monster move, folks. There's no two ways about that. That's a huge move. DXH5. It's going into those swing points.
Oh, by the way, oil right now we are sitting at a 1 deviation.
Gold move. Is?
Oil is.
Oil is. Oh, cool, man.
66.29 is literally a 1 deviation move. So we're just now bouncing right off that.
Okay, so let's look at that. We're down 150, and hell yeah, it's going a lot lower. Oh, this is going to be interesting. Now, inside Darryl's analyzer, folks, this is so cool. Now, once you bring up the Nadex platform, go over and test the analyzer, because what happens with the analyzer, these deviation moves inside the analyzer are huge, number one. And what you have is this. That downdraft that we just got in oil is telling me we're at 1 deviation. It'll have to build some cause now, but it wants to go lower, because we had a wicked expansion of volume when it just slammed. So when you line this up, and this is what I'm saying specifically, you're at 1 deviation. So let's picture if you were going in there right now and you thought it was going to go down right now. The probability isn't that you got the first move down, and the first move down just took you from 67 to 65.30. Then you'll build some cause. You'll build some cause, and when you're building cause, you'll understand it doesn't want to go lower. And the way the probability goes with that, if you get a little bounces on a 10-minute basis, which we'll get, if it's on lighter volume, guess what? That's building cause to go down. If you get a couple spikes with good volume on the way up, well, that's the end of that move on the way down. then what you would end up doing, so I'm going to give you both scenarios. What you'd end up doing, you take Daryl's analyzer, you have a one deviation move. Let's picture that right now, if oil spiked higher and had volume, then what you would do is you wait for the pullback to test the lows and buy it, okay? Because it'd be a normal bounce in a market that already hit a deviation. That's the bullish part. Bearish part would go like this. You bounce on lighter volume. Let's say it could bounce, it would be really cool. If it could bounce somewhere up to like 65, 56, actually 65, 80, and you got light volume, guess what? Now you got another trade in the Nadex platform setting up, because what you have there is that you have a high volume swing low at 65.20 that wants to get tested, you know. So, and as you're going through that analyzer, folks, what you will see, because the amount of contracts that are out there, it makes it very easy to basically pick the contract that is going to be the highest probability for the strategy that you're trading. It's not going to basically tell you to go long or short, but what it is going to do is tell you whatever strategy you have, what is the best contract out here. Oh, it's going to be interesting here. Are we at 20 past it? We're 2 minutes into it. Okay, Z, FOA. Because they want to hit this S&P right now. Interesting.
You're back.
Yeah. Okay. So let's,
you liking these 20 minutes, aren't you?
Listen, man. I'll tell you this, folks. If you're trading the 20 minutes, right, you better make sure that you basically don't book anything else for the rest of the day.
Because you're going to get addicted to it. You're going to want to keep playing.
When we were in, so picture this. When we were in
Vegas.
Hilarious.
This is great.
So picture this. Thank God that I don't live out west, folks. I'll tell you. Because what happened is that when we were working out in the money show in Vegas, Daryl was out there, we were out there. What happened is that I believe I think I did the morning show. Yeah, I did a morning show because someone was out. And then I got to trade all day, because what ended up happening is that out there, the markets closed at 1 o'clock, and then I went and worked, you know, from 1 o'clock to 7 o'clock at night. So it was like, and I had said to a couple guys that we were with, that day I actually traded every 20 minute there was. And it was a good day, because there was volatility. You want volatility. You need volatility in these things. That's the bottom line. And that day, you know, we had the volatility. Like the last 20 minutes, we really don't have the volatility in those S&Ps today. But that doesn't mean that at the beginning of the day we had it in gold. There's still a little in gold, but it's not enough. See, most of the move has been done basically out here for this morning. So
right. It sort of things go flat, NFP happens, things go insane, and then give it about an hour and a half, 2 hours, and then it just
flattens out. Exactly.
If you made your money, if you lost your money, and everybody's gone for the day. I mean, it's, you know,
you're going to make hay when the sun's out. There's no two ways about it. And inside when you go through these contracts, what you will see, what I suggest is that whatever you've been trading, stay there at the beginning. Okay, if you're trading equities, then you want to go in the future market, the S&Ps. If you've been trading commodities, great. Whatever commodity you're trading, you can go into that commodity. If you're trading currencies, you're going to have a field day. Because what happens with the currencies is that you will not believe, it's hard to envision the first time you trade currencies in the Nadex platform that your risk can be so defined. You know, because what happens in the currency market, I said a little bit earlier, they just go all over the place. And, you know, this morning is the typical deal. There's no doubt. I mean, those moves this morning were absolutely incredible. And those moves, folks, okay, right at 8:30, as soon as that jobs number come out, it was extraordinary. The euro at that point went from 123.68 to 122.89. That is like one monster move. And the dollar, of course, went from being flat up 627 ticks. So it's pretty amazing.
Yeah, it sort of gained back a little bit of that stuff they gave up earlier this week. So it's been nice.
Yeah. And, you know, the dollar index only trades to 130. So it's got to be, I think, or maybe 230. We'll see where that shakes out.
It's a nice thing. Like, a lot of people don't even know about it. But, you know, it's a great instrument to trade.
It is. It is. It's what happens at the dollar index, folks. Okay, even if you're trading in the futures market, the movement won't kill you. That's, you know, it's pretty intriguing. It's interesting, man. It really is. You know what I mean? So, and it's liquid,
and it decently moves. You know, I mean, it's not like the moves won't kill you, but like you said, usually like It has some nice ebb and flow to it.
Right. And
versus like just it's more of like obviously dollar index. So instead of being like a stock versus S&P, it's like instead of a euro dollar, it's an index of currencies.
That's right.
And so it smooths it out a little bit for you. So that crazy volatility of FX, if you're a futures trader,
right,
or a forex trader, that crazy FX, messes with you a little bit. You want to smooth that out. That's where the dollar index comes in, and it's usually a pretty nice, smooth instrument to trade.
Hey, there's no doubt. And what you have, folks, is that you have volume in it. Number one, intraday, daily, all of the above. And what you also have is that you can use that index. What I do is that even if I'm on the Nadex platform, basically trading the currency pairs, I'm still looking at the dollar index for the correlation of, okay, do you want to go up or you want to go down? Where intraday, where are we? Because that is, the bottom line, the only indication that you have actual volume. What ends up happening, you may have some quote feeds that have volume, but just so you understand how that works, that volume on that quote feed that you'd be looking at is the private quote feed in private volume of whatever broker dealer that you're, FX dealer that you're dealing with. Okay, so that is certainly not volume you want to trade off. No doubt about that.
There we go. Oil's pushing up.
Oh, look at that.
Let's
okay.
Try. There it's going. Bouncing off that deviation. There it goes.
Okay, CLL. CL. Okay, so we got... It's pretty wild how it just stops right at that deviation, isn't it?
Yeah.
It really is, man. And so what happens is this. So check this out, folks. Let's say that you were short the oil market right now and hits the one deviation. Well, guess what? It's Friday. Take your money. Go down the beach if you happen to be in Florida. If you're up north, go skiing. Bottom line is that take your money and go. That's it. End of story. You get... it's 10:48. It's pretty nice on a Friday if you can take your bread by 11:30 and get out of town. Because what you're going to see, that's the name of the game. And what you don't want to do, especially on a Friday, is give... Well, you don't ever want to give the bread back. But what does happen, you can't expect higher volatility after 1 o'clock on a Friday afternoon. Wherever this is shaken out in the next hour, hour and a half, that's where this whole thing's going to shake out. What is intriguing, if you happen to be in the metal market and the gold or silver equities, these things are really acting nice today. What you have is this. You have silver. You have dollar index up 617 ticks. They pushed the gold market down 20. It rejected lower price. It's down 12. If we go over to any of these gold stocks, what you're going to see is that they won't back off, man. They rejected lower price. If we look at an Eco Eagle went down to 23.36. It's at 24.03. It's rejected lower price, but check this out. We're going to have not only rejection of lower price, we're going to have so much lighter volume. It's unbelievable, and it's going to stay inside the range. That's saying that gold and silver want to scream. This is Darryl Martin, Tom O'Brien. You stay right there, folks. We'll be coming right back. Dow Industrials right now, 54. Nasdaq up 11. S&Ps are up 2. Oh. Don't hit them till we come back. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Not all gold stocks are the same. This offer is valid for current or new subscribers. All the details are on the front page of TFNN.com. The sale will be over before you know it, so act now and lock in this incredible price by visiting the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Darryl Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. Don't forget, folks, all the programming at TFNN right on your cell phone, TFNN.mobi. We have live programming every trading day, 8 a.m. to 6 p.m. You can get that's on the audio at TFNN.mobi. You want to get Tiger TV, just go to TFNN.com on your cell phone and then hit the TV on the right-hand corner. Now, what's going to be interesting here is that this market, folks, is going tick for tick on the way down, not the way up. Well, it's already gone up with this dollar index. It's really intriguing. So the dollar index, folks, just when we were on break here, just went from 89.63, and it only gave up basically 75 ticks, and it's still up 570. But what happened there is simultaneously the S&Ps go. So it's really intriguing watching this correlation now and how this thing is set up, because man, it's a pair trade out here that's pretty amazing. If we pull the S&P up just for a second, I'll actually pull both of them up so you can see how this is shaking out. ESZ4. Okay, so we take the E-minis first, and right now you're at 7.3. We are going to make our way down to the 7125. And where I'm going with the 7125, that's the high volume swing low at this point of the day. So that little baby just wants to get tested. Now you take that correlation. Now watch what happens. I'm going to go over to this dollar DXH5. You know what's amazing, Daryl, is like it was only like a little tiny hit in the dollar index, and the S&Ps gave it up that quick. Not gave it up, but come back that quick. It's like, wow, man, that's crazy. And it's like I have both of them up on my screen. I was just happening to watching both of them because my take is that for some reason the dollar index, the market likes a higher dollar, folks, okay? But what has also happened is this, is that once it got up to these highs, the market itself is not bursting higher. The gold market is not getting killed, but as soon as the dollar backs off at all, then we stay flat or we back down. So you're always looking for correlations that say, okay, how can I get a little edge in this marketplace? And right now, that's the edge because when one moves, if the dollar, in this case, the dollar did move first. And, you had 10, 20 seconds to get into the S&P. But it's going to be interesting watching this on a longer-term basis because if, in fact, that's the correlation that's going to be happening and the dollar's topped, well, we're going to see some action on the downside.
Okay, so the correlation factor basically help you bring in to confirm that short S&P, you're saying?
Yes.
Awesome.
Right. Exactly.
We're coming on down right here. I mean,
yep. No.
20-minute range is 2071. That's the expected move during this 20 minutes, which would be a break just below settlement. So we're going right back. We've been playing around settlement all day there.
Yeah, right. And so you got 11. We got a couple more hours for action here, folks. If you see a burst, meaning in the contracts, then you're going to get some action. Right now we are at let's see, 5. We get 7 minutes into the bar, and it's 16,000. What does happen is this, though. See, when you get into the bar, and the bar I'm talking about, folks, is the swing of 207050. You'll hit the bar, because we're deep into that bar. The top of that bar, well, actually, it's close. The top of that bar is 2074. The bottom of the bar is 2070. You stay right there, folks. Mr. Basil Chapman's coming up next. Nico and Paige are going to keep you healthy. Daryl's coming back. Dave White, myself. We're going to have John Logan on this afternoon. Daryl, thanks so much, man. Have a great one, safe one. Of course, we look forward to the show and have a great weekend.
All right, you too.
Stay there, folks. We got our man, Mr. Basil Chapman, coming up next. Dow is up 52. Nasdaq up 8.5. S&Ps are up $1.50. Basil's going to be coming right up with you, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.